Welcome back. Financial Issues. I'm Dan Seria. It's great to be here. 866-300-9298. So some very interesting comments. We'll play that again another, throughout maybe next week a couple times because they're so important when we think about our Constitution. And I know that it doesn't appear. And again, I go back to what I said earlier. I got to blame this on conservatives. I don't blame it on it's like kids running wild. If kids are running wild, do you blame the kids or do you blame the parents? I mean, think about it. So we've got liberals running wild. Do we blame the liberals because we know what they're going to do and want to do? Do we blame them or do we blame the fact that there's no accountability? There's no accountability. They're not even, conservatives aren't even calling them accountable to breaking the law. Oh, everybody's talked about it. We're talking about, but there hasn't been a conservative revolt. And last time I checked, conservatives still control the House of Representatives, even if we're following Nancy Pelosi. Anyway, we're going to get to your financial questions. 866-300-9298. Let me go to Sandy. Sandy calling us from Pennsylvania. Hi, Sandy.
Hi, Dan. Thank you for taking my call. It's a beautiful day, isn't it?
Oh, man. We're getting clobbered.
I just wanted to know if you ever heard of a thing called the banker's secret, the 770 account?
Yes.
Why the bankers are getting so rich and that we can actually get involved with that, too, and make some money, and yet nobody talks about it?
Yeah. Well, here's the thing. It's very, very hard to get involved in 770 accounts. They're not. It's not as if they've been packaged up to where the common, everyday you and I kind of investor can get involved in. They're very difficult. They don't quite work as well as all the propaganda out there that says they work, because the propaganda out there is to trying to get people to buy something, either a newsletter to tell them how to do it, or some book or something like that. So it's a little bit tough to do. It's basically it's a number of things. It's a little bit more than just the receipt or the return of dividends, because it is a dividend primarily on debt as opposed to dividend on a particular stock of a company. So you can buy certain companies that are producing these very high dividends and some of the other things that you get in a 770 account. The reason it's called 770 stands for the tax code in the IRS that allows people to take advantage of it. But the thing that the propaganda doesn't tell you is that they too are volatile. And trust me on this, banks are not getting rich doing this. They're getting rich doing a whole lot of other things that we can't do, that they shouldn't be doing. But it's not just this. As a matter of fact, this is very secondary. But it's subject to the same volatility. The problem that I have with it, it's subject even more to good leadership of a company, profits of a company, fundamentals of the economy. It's all subject to that. So it's not some sort of what they peg it to be, some sort of foolproof thing. Here's my overall. I don't do these. I stay away from them because of the lack of transparency in and around them. And I can't do anything that I can't fully get everything I need to get to understand what they're doing, how they're doing it, where they're doing it. I'm not going to do it if there's not a lot of transparency, and there isn't in these. So I stay away from them. But I would say this. I don't believe anybody, whether it's an individual investor, even back when I had a trust company and was managing hundreds of millions of dollars, I didn't want to get involved in anything that I could not get enough information to fully understand it. I got a call yesterday from someone who didn't understand what they had, didn't know what they had. And I've always tried to tell people, if you can't explain it to your next door neighbor in great detail so that they understand the same thing you understand, then you shouldn't do it. And we do that all the time. We jump into investments based on a push to sell newsletters or books or whatever it is, and hearing only the good. And that's how we get in trouble all the time. We only hear one side of it. We only hear the good of it. And then when you try to research it to find the other side, you can't get it. You can't find it. So all in all, it is a legitimate thing. It is a legitimate tax code issue that could have benefits to the average person, but it could also have great risk. And that's the part that we're not hearing about. So all in all,
a blessing.
What's that?
Have somebody. I said you're such a blessing.
Oh, thank you.
To be able to call in and ask these questions. I've only been watching your show not like a real long time, but I'm just so blessed to be able to do this now.
Well, thank you, Sandy. I appreciate that, and I'm blessed to be on Biz TV now. There's so many more people seeing the show, watching the show, and in particular now, I've got so many people here at home in the Philadelphia area too, now able to hear the show and see the show. It's a blessing to me. So that's what we're here for, Sandy. Thank you so much. I sure appreciate it. Let me go to Shirley, also calling from Pennsylvania, watching us on Biz TV. Can you tell we're getting clobbered with snow? Cheryl, I'm sorry. Can you tell we're getting clobbered with snow and everybody's just hunkered down in the house? Go ahead, Cheryl.
Hello. Thank you, Dan.
Sure.
For accepting my call.
Mm-hmm.
I have a large number of savings bonds, almost 100, and dating from back into the 70s.
Okay.
And I have two questions I have to ask you. I'd like to know if it would be better. Some of them are earning good interest or have earned good interest. I'd like to know if I might be wise in cashing them in and buying gold with at least half of them.
Okay.
And also, when it comes to Pelosi and the people involved in governing, I believe in conspiracies. I don't think anybody does anything on their own. And I just noticed when McCain was running, he pulled back the closer we got to election. Same thing with Mitt Romney. He pulled back. And Obama just walked in there. And I just think possibly, for lack of better words, Gestapo activities are being used against them.
Yeah. I'm not yet, and I use the word yet, totally convinced of that. Are there Gestapo-like tactics? Yeah, yes. And I've gotten criticized for using that phrase when I speak of Eric Holter, who has been the chief agent of enforcing those Gestapo-like tactics. And I got criticized for that a great deal and was called a racist and all that kind of stuff. But I think that there is so much that we cannot ignore. We cannot ignore the utter lack of leadership and abilities to lead. And you put that on top of having no guts in very difficult times. So even if you were, which we don't have any, but even if you were a good leader, you still have to be unafraid of confrontation. And you have to be unafraid, even if it means losing your position. So even if we had good leadership, we lack the convictions to stand up and stand firm against the odds, even to wage war, have a battle, even when we don't think we can win the broader war. We still have to be waging the battle, and we don't have enough leadership and guts to do that, in my opinion. But I am not going to rule out the conspiracy theories out there, because some of them aren't conspiracy theories. Some of them are factual and may be very accurate and may be the reason. As far as your savings bonds, there are a number of those that are no longer collecting interest. So they collect interest for about 30 years, and then they stop. So after 30 years, they've become as valuable as they can get. So I would suggest that you check, and you can go to the Federal Reserve website, and you can put the serial number of your savings bonds that you're questioning, and it'll tell you exactly what it's worth today, and whether it's still earning interest or not. So you can find that out fairly easy, or your bank can tell you. And so those you should sell. Would I put it into gold? No, I probably wouldn't. I'm okay if you buy some physical gold for about 10% of what you have. But I need to caution you that if you're concerned because the sky is falling, the economy is crashing, we're going into depression, which all may be true, I don't believe your gold is going to help you. If you're buying gold as an investment and you're just going to keep it for a very, very long term, that's fine. And when it gets up well above where you purchased it and you sell it, I'm okay with that. But I don't want you to buy it because you think during those depression years you're going to be able to sell it or buy a bag of groceries with it or help you survive. It's going to be illegal to use. The government is not going to allow an alternative currency to come into the monetary system that's already in trouble. I'm not going to allow you to do that. So you're going to have to do it through the black market. And I would rather have food stored than I'd rather have gold stored. Will it be up in value? Sure it will. It'll be $8,000, $10,000 an ounce. The question is, I say this all the time because it sounds silly, but the question is, can you jump on a plane with all your gold and get to Hong Kong very quickly and sell it? Because it's the only way you're going to capitalize on the value that you have, in my opinion. So I wouldn't put a lot of it in there. You still have some E-bonds, double E-bonds that are collecting pretty decent interest, better interest than you could earn in a CD or a money market account. So obviously keep hold of those. And I want to remind you of one other thing, because this is important. When you sell, when you cash out of your double E-bonds, they are treated to you as income. It's not capital gain. So if you buy a stock, it goes up 50%. You sell it, you've got to pay 15% capital gains tax on that gain. E-bonds are not like that. It is treated to you as income. So you need to be aware that when you sell it, it's going to impact your income. It may not be a big deal for a lot of people in that it's still going to keep you in the same tax bracket and it's not going to be a big issue. But certainly you want to, I don't know how much you have, but you want to be careful that you don't push yourself in another tax bracket. But I'm all for selling those that are matured, but you might have to do it gradually. So check that out as well. Great stuff. Great call. I thank you for that. Let's see how much time we have here. Let me go to Kathy, also from Pennsylvania. Hi, Kathy.
Hi.
How are you?
Good.
Good. What's your question?
Okay, my question is, back in 2010, I was offered a loan modification because I had been laid off.
Mm-hmm.
Okay. In the meantime, by 2011, I did get a job. But at that time, too, also, my mortgage company was taken over by another mortgage company. So for 9 months, I was on a loan modification.
Gotcha.
And they did say I would have to pay that back, which I was aware of. So now it's 2014. My balance that it was when I first started out is sort of the same. So I said to myself one day, this seems ridiculous. So I questioned them about, well, where's my money going to? And then one girl kept talking about something with capital. I'm not sure what she was referring to.
Yeah.
But she kept using that term, and then it always seemed like they were trying to explain something to me. I had no idea what they were talking about.
Mm-hmm.
So I said, okay, well, send me some information. I want to see where my money was going to. And then I actually got my taxes back, and they said 2,000 of it went into my principal.
Mm-hmm.
For every year, I'm figuring at least 2,000 of it went on to my mortgage. Mm-hmm. Why is it in 2010 and we're now in 2014? Is it around the same amount?
Well, because they've added interest and time So when they modify, they don't do it for free. People think that a mortgage modification is something that is going to reduce the debt, or it's going to, it's going to help you out even in the long run. It does help you out in the short term because it helps you keep your home and it keeps you, paying payments and all those kinds of things, and that's fine. The problem is that they don't reduce the principal in most cases, and they defer some of the interest that you are now not paying to add time on to the mortgage. And what happens is the way that your mortgage payments are calculated, how much interest and principal in those first couple of years, just like in a brand new mortgage or a brand new car loan or whatever it is, most of what you have in those beginning years is all going to interest and all going, in this case, to fees and modification costs. So that's what's happened in the first couple of years. So the only thing you can do is to, refinance again, which I don't know that I'd recommend, but refinance again to get a normal mortgage, or just continue plugging along until such time where you get a little bit more discretionary income that you can pay on the principal yourself, because that may be your only solution to get some money on the principal. 866-300-9298. We'll be right back.